In this video, we'll uncover 11 mistakes first home buyers make step by step. So keep watching. Mistake number 1 is misunderstanding the real estate agent's role. It is a real estate agent's role to get the best outcome for the seller. Whilst they may try and help you through the home buying process, understand who they work for. I've personally made this mistake before and trusted the real estate agent by sharing a little bit too much information. On one occasion, I told the real estate agent I only had a 5% deposit. And whilst I could never confirm this was the specific reason I missed out on purchasing the property, the fact that the real estate agent knew that could allow them to prioritize an offer with a larger deposit. Either way, by misunderstanding the real estate agent's role and giving them too much information, I missed out on that property. With all this being said, it's worth remembering the real estate agent is still a good source of information. Questions to ask your real estate agent in Brisbane include: why are the vendors looking to sell their property? How long has the property been for sale? What was the original asking price? Are the sellers negotiable on price? Mistake number 2 is thinking your pre-approval is guaranteed. Over the last 12 months, we've seen a troubling trend. More and more banks are reducing the amount of time they spend assessing pre-approvals. Many banks and brokers are quick to offer pre-approvals as a way of testing if you qualify for a loan or not. Banks are now opting for an automated system says yes approach to pre-approvals where no information is actually verified or even checked until you purchase the property. This is a huge risk. As an example, if your income hasn't been properly verified, then your borrowing ability might be outside of what you can actually achieve, both wasting time and money looking for properties you could never afford. A pre-approval does not guarantee you'll get a loan approval from a bank. That, coupled with the fact that you're locking yourself in with a lender that's competitive today. However, if another lender comes out with a better deal prior to you purchasing, then you're going to need to start again. It pays to be patient here. At Hunter Galloway, we've developed a loan eligibility assessment based on an independent 5-point check to test home buyers' eligibility and ensure success when purchasing. Mistake number 3 is thinking you need a bigger deposit. Let's be real, saving a 20% deposit is great, and the reality is that kind of deposit is becoming harder and harder nowadays. Looking at the numbers, you need to save $100,000 for a $500,000 purchase. That's a lot of money. That being said, with as little as 40 grand or 8% on a $500,000 purchase, you can get in the property market. This is far more achievable. There will be lenders' mortgage insurance. However, think of it more of an opportunity cost to get in the market sooner and the fact that you're not going to need to pay rent anymore. There are some lenders out there that'll lend between 85 and 90% with no mortgage insurance. Other ways to get in without a deposit include parental guarantees and gifted funds from family. Mistake number 4 is looking for your forever home. Looking for a home to live in is highly emotional, and it's easy to get caught up looking for your forever home. Emotions cloud judgment, causing in-the-moment decisions which lead to you overpaying the market value. The reality of purchasing a forever home is unlikely, and you should really see it as a stepping stone. According to the 2016 Australian census, almost 25% of people aged between 20 and 39 years lived in a different address from 2016 compared with 2015. Not to mention your own personal situation. If you're not married yet or haven't found that significant other, your circumstances may well change when you decide to settle down. If you don't have kids yet, being closer to things like schools become more important in the future. Slow the buying decision down. Think about potential changes in the long term and how it actually might impact this decision. Take an extra day or two to mull over things. Mistake number 5 is being influenced by the market. As the saying goes, a tiger doesn't lose sleep over the opinion of a sheep. And it certainly rings true when it comes to property. Everyone has an opinion, from your Uber driver to your parents to your friends and work colleagues. But having an opinion doesn't necessarily make them right. The same goes with market commentators and deciding when to get in the market. When looking to purchase, it's not about timing the market rather than the time you're in the market. Waiting for the perfect time to purchase is near impossible. It's important to focus on your own long-term goals rather than being influenced by the media that tend to sensationalize the market on either side of boom and bust. Don't let this influence your long-term lifestyle decisions. Now, if you're looking at ways to get an idea on how the market's going, I'd recommend checking out the monthly property review by Hare and Todd White, who are Australia's largest property values. This report includes the National Property Clock, which gives details at what stage the property market is at. Mistake number 6, not negotiating. Here's the deal. Everything is up for negotiation. From the purchase price to terms and conditions, even the red couch in the lounge room, it's all up for negotiation. This is a common mistake, and I see a lot of first home buyers feel uncertain, almost worried that they're going to get rejected if they put an offer that's far too off the vendor's expectations. The beauty with negotiation is you can always go back and reevaluate your position. So take back control, haggle down that price, and if the vendor rejects it, there's nothing to stop you from going back with a revised offer. Remember this before you start negotiations. Mistake number 7, timeframes aren't set in stone. One we see a lot of first home buyers stress over. It's common for the purchase contract to have timeframes for things like settlement, finance, and building and pest. Most of us will remember our high school or even university days, where if you missed a deadline for an assignment, the consequences were significant. When purchasing a property, 95% of the time the consequences for missing a deadline aren't grim and the world doesn't end. For example, it's pretty common for a finance extension of a couple days to be granted by the vendor if finance hasn't quite been met. Stay composed and steer clear of stressing about things you can't control. Mistake number 8, forgetting about insurance from day one. Did you know when you sign a contract to sell to purchase a property, you become responsible for that property after the contract is dated? This does vary depending on which state or territory you're purchasing in. It pays to get a cover note from an insurer sorted. There are plenty of insurers out there that will provide you with complimentary coverage until the day the property settles. Mistake number 9 is cutting corners. The additional costs of purchasing a property can be expensive, and it's also quite tempting to find ways to eliminate these costs to save you money. But cutting a few corners here could be putting yourself at risk and potentially cost you thousands in the future. This definitely rings true for building and pest reports. I can confidently say that building and pest reports have prevented me from buying a lemon that would have cost me thousands of dollars in repairs. When completing a building and pest report, it pays to be there when they're completing the inspection. That way, they can show you firsthand any problems that may arise. Mistake number 10 is your credit score. Bad credit is simply the quickest way of getting your loan declined. Most lenders are looking for your credit score to be above 650. Below this, and your chances of approval reduce. Did you know your credit score reduces when doing credit inquiries for things like credit cards, payday loans, personal loans, and even home loans? Your credit file shows your last 24 months history for all credit facilities. Unpaid telco and energy bills are going to haunt you here too. Late payments and defaults will be scrutinized by the lender. It's not all bad news though. If you've had a late payment or default listed incorrectly, there are companies like Credit Fix Solutions that can help you have this removed. You can check your credit file, even your credit score, through companies like Dun & Bradstreet, Equifax, and Illion. Mistake number 11, deposits required to the real estate agent. This is a common and misunderstood step of the buying process. There is an initial deposit paid down once the contract has been agreed upon. This ranges from $1,000 to $2,000 here, and the balance of deposit payable once the conditions of the contract are met. Things like your finance and building and pests. This ranges from 2 to 10% of the contract amount. These deposits will reduce your final deposit that you'd need to otherwise pay at settlement. So, if the bank's lending 90% of the property value, 10% will be the required amount you need at settlement. If an initial deposit and balance deposit paid equals 3% of the contract price, that means the remaining 7% will be due at settlement. So you're not going to be double dipping on funds required here. And there you have it. You're now in the know. So it's over to you. Are you looking to buy a place? Did you know at Mortgage Broker Brisbane, Hunter Galloway, we help people right across Australia? So whether you're looking to buy or refinance, you're in good hands. Simply reach out or call us on 1300 088 065 or visit us online at huntergalloway.com.au. And as always, thanks for watching. We'll see you next time.